Welcome back, friends. In this little video of mine, I will address the world financial markets and what's lying ahead. Friends, if you flick through the sell-side research notes from the end of last year, you will find plenty of analysts crowing about US exceptionalism, China's uninvestability, and Europe's dull stock markets. In the last 2 months, since President Donald Trump took over, that's changed quite a bit. A Bank of America survey of fund managers this week revealed that equity allocations to the United States had fallen by the most on record in the month of March. Money has been flowing rapidly from the west to the east. The valuations of European and Chinese companies finally have gone up quite a bit. The White House's tariff raising agenda, America first foreign policy, and all around many things that curbs on in immigration have dramatically altered the landscape around which the American economy is functioning currently. There is a multi-billion-dollar commitment by NVIDIA and TSMC to invest in chip manufacturing in the United States. Yet you find that the S&P 500 had quite a good correction in the last few weeks. Investors are looking for somewhere else to put their cash at this point of time, now that have seen the overvalued financial markets in the United States. In Europe, the president's threats to NATO have jolted Germany and the EU to promise more defense spending. So there is kind of, you see, more a greater craze for the defense stocks in Europe, and they have gone up in sympathy. So the world is changing quite a bit. Not all the market shifts, however, emanate from Donald Trump. Some of the things that he's doing make sense. If you are staying in the United States, or if you have been given a visa, then you have to obey the law of the land. Perfectly agree with Donald Trump and his group. You cannot stay in a country. If there are laws to be abided by, you have to go by them. However, if you look at the world landscape, you find that in China, the technological advances have rebuilt faith in its private sector. DeepSeek has surprised tech analysts with its advanced artificial intelligence model using cheap chips. On Monday, electric vehicle maker BYD unveiled a battery that can charge in just 5 minutes. It's just like the gas you fill in your petrol car. You know, it's as quick as that. So that's quite a big thing that BYD has announced. Beijing has played a role too. It has stepped up stimulus support for the deflating economy. It has announced a plan to vigorously boost weak consumption, but investors want more details, and they are waiting indeed. Policymakers are also trying to keep up with the shifting economic and geopolitical sands. With COVID-19 debt piles still a drag, further borrowing risks pushing up the cost of credit even further. Although Germany has fiscal room, its spending plans have already pushed up European bond yields, as you can well understand. In China, the need to bolster consumer demand may be affected by a desire to hold back fiscal firepower to support exporters, depending on how the trade war with America advances. The prospect of retaliatory tariff measures expected to be announced by President Trump on April the 2nd, that has also somewhat dampened the growth outlook in the EU and China. In uncertain times, it may be tempting to lean on the optimistic market themes that have developed in Europe and China. And global strategists tend to find themes in different parts of the world. They try to shift from one country to another and one sector to another. And they try to find out what could be the flavor of the season. But it will still be some time before either Europe or China can have an enduring influence on the world financial markets. America has, across the global economy and financial markets, exerted the maximum influence over the last several decades. A weaker economic outlook in America tends to dent global prospects at large. Investors burnt by the recent plunge in the peerless S&P 500 face an uphill task to recoup losses by investing abroad. Many will hope that the United States regains its poise. Even then, the danger is that the recent loss of investor appetite in America's exceptionalism leaves a lasting mark. Friends, Wall Street has corrected over the last few weeks, and you have seen the European and China stocks rally. However, I would hasten to add that let us not consider that a rise in the Europe and the Chinese stocks could more than compensate for the fall in the US stock markets that's happened over the last few weeks. It is not only the overvaluation in the United States, but also various technological breakthroughs in countries such as China, as I just explained, like the DeepSeek developing artificial intelligence at very cheap valuations, using NVIDIA chips, which are not as expensive, they are not as state-of-the-art, yet creating even better and cheaper models, AI models, using those chips have created or caused quite a turmoil in world financial markets. Last week we had BYD talk about charging cars in just less than 5 minutes. So these are great innovations that are coming in various parts of the world, in this case China, and that is something which has added to the investor appetite to invest in countries and economies such as Europe and China. But the world is so focused and concentrated around US equities that without an American participation, it is very difficult to envisage the entire rise to be focused around Europe and China. It's the largest economy in the world, and I'm sure that the steps that Donald J. Trump is taking will invigorate the American economy and American stock markets in times to come. How long this current correction can last in the American markets is another thing, and we would love to keep you abreast of how far it can correct before we see the American stock markets return with full vigor and force, which will drive world stock markets even higher from here. Friends, to get to know where the American markets are headed from here, do join our Prime or Prime Plus Telegram groups. For the Indian stock markets, you can join our Premium Plus, which gives you 10 to 12 days predictions of the stock markets, plus good stock options. And the number to get in touch, you may WhatsApp us on 9820861044. Happy investing. Take care. Have a great week ahead. Take care. Bye-bye.